So yeah, we spoke back in November when we just published our maiden 43101 resource on the Opimiska, the open pit constrained resource, 104 million tons at nearly 1% copper equivalent, almost 0.9 actually. But once we've really strengthened our balance sheet to the point where we have $18 million of cash on our treasury, and this is the first result out of the gate. There's going to be a lot more results coming.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. This is Financial Survival Network. I'm Kerry Lutz, your host. We are getting an sponsor update on QC Copper and Gold from CEO Stewart. Stephen, thanks so much for being here. So when we last spoke last year, a lot has happened. Back in November, you released a resource estimate on the Opimiska deposit, and just several days ago, you announced drill results. One intercept, 184 meters of 0.32% copper. So briefly, bring us up to date.
Yeah, thanks, Kerry. We spoke back in November when we just published our maiden 43101 resource on the Opimiska, the open pit constrained resource, 104 million tons at nearly 1% copper equivalent, almost 0.9 actually. But since then, a lot has happened. Once we've really strengthened our balance sheet to the point where we have $18 million of cash on our treasury. So corporately, we're quite strong. But then technically, we spent a good deal of time auditing that model, understanding what was in that 104 million ton resource and what was out. Okay, so what is considered waste within that resource or that open pit. And then we took great care and effort in figuring out, well, how can we convert what is considered, anything that's considered waste into ore? We've got a lot of data in the model that's, and if anybody goes to our website, they can see all of the data that is outside of the pit. And so it wasn't necessarily all included into that mineral resource update. So there's plenty of low-hanging fruit within the pit shell as it's currently understood that we are focused on converting what is calculated as waste within the pit and turning that into ore. We have 60,000 meters going as we speak. We started up in January, and this is the first result out of the gate. There's going to be a lot more results coming. But what the significance of that audit and this result that came out is that this hole, I believe it's hole 122, was about 184 meters at 0.3, thereabouts copper equivalent. And that goes right into a void, a waste void. Okay, so that's not drilling into known mineralization, that's drilling outside into this waste so we can convert it. So that's the whole objective behind this 60,000 meters that's going is really amp up the tons that we will consider to be ore, that will reduce our strip, increase the contained metal, and have significant impacts on the project.
Just curious, what is the cutoff grade for this deposit?
The cutoff grade that we used in September's resource was 0.2% copper equivalent. That's what we'll continue to assume is our cutoff grade until we update it. There certainly have been discussions around later as we enter into the PEA evaluating that holistically. But I think that's a relatively fair cutoff grade at this point in time. I mean, if we didn't have the amazing advantages of the infrastructure, so if we had to consider building a road, a rail, a power line, fly in, fly out, all that sort of stuff, if there wasn't a smelter nearby, such as in Rwanda, which is on the rail as well, then you'd have a higher cutoff grade. So I mean, that's such an advantage that this project has, is that our operating costs and our capital costs are going to be significantly less than remote projects or projects that have infrastructure challenges. So the fact that we don't have to build those major line items and the fact that we have lower operating costs allow us to get away with, in effect, a lower cutoff grade.
No, it's impressive. And you see that, like you said, deposits that would otherwise be uneconomical because of the infrastructure and where it's situated, not to mention the higher grade that's in the pit, makes all this viable. What does this say about the magnitude or the potential of the overall deposit besides what's in the pit?
So what we're focused on right now is the lowest hanging fruit we can see. And it's also the highest return, so that if we can, again, not to belabor the point, but it's critical that our followers and investors understand that, to convert a ton of waste in the pit and take it away, and end up getting paid for it as opposed to it being an expense is the absolute best thing we can do for this project. Now, just this open pit as it's defined, as we're talking about it right now, which is called the Springer Perry open pits, one single open pit. The Opemiska project itself is much, much larger than that. But it's about triaging our resource where we're going to get the best bang for our buck, and that's where we're going to get it. Now, once we've done converting as much waste into ore as we see feasible or possible, and we think it's going to take about 60,000 meters to get us to that point, then we shift focus to the third and the fourth mines, which are just beside it. Okay, so just literally about a kilometer away are the Cook and the Robitaille mines, which were the third and the fourth mine that was operated under the Opemiska copper mine complex when it was operated by Falconbridge for nearly 50 years. These are significant producers. We've modeled them extensively, just like we did with the Springer and the Perry, but we haven't yet really sunk our teeth into it, but we will. And so I think probably later towards Q2, once we're well into the 60,000 meters, investors can expect more details on how we're going to tackle that. But since we audited the resource, the September resources, and saw that we could convert a lot of this, we sort of got all hands on deck and say, instead of going out and focusing on satellite pits, let's focus on this pit, get it as big as we can, lower that strip, increase the metal content, come out with an updated resource at some point later this year, and get our cost of capital down so that we can look at this thing holistically. When I say holistically, I mean we've got over 13,000 hectares. We even got a second satellite deposit, not on the Opemiska proper, but about 20 kilometers away, called the Roger Project, 500,000 ounces of gold in again, pit constrained at about a 1%. And there's all sorts of opportunities like that in the Chibougamau-Chapais district where we are. It was a major copper gold producer in Eastern Canada throughout the 20th century. There's no operating mines there now, but it's highly fertile for mineralization. Never been explored in the context of an open pit until we came around and started that. So it's really early days on understanding the potential of the Opemiska project. But I would say we're quite advanced on defining the core of it as we understand it right now, which is the Springer and the Perry. By the end of 2022, we'll have those numbers quantified, and I think the market will be impressed, and many will be taken aback about the potential or the size and the economics that we'll move towards in 2023, and then we will move towards defining the economics and the engineering probably in early 2023 behind the pit. But then in parallel with that, we will be drilling, call it expansion, satellite pit potential, all throughout the property. There's more targets than we can possibly handle right now. That's why we have to really focus on where we know we're going to get those results and that return.
And right now you have 2 drills going with a third coming online shortly?
That's correct. We started up, we were drilling all throughout Q4, so we've just started to get those results in now. We started up in January. It's a little slower because it's very, very cold up in northern Quebec, unusually so. So it was a little slow. We just got the second drill on the property last week. It is now turning. We are getting a third drill on there, which is going to be going for potentially maybe some step out targets, maybe to expand the actual pit itself. So there's some of those sort of called wildcat targets that I'd like to explore. So maybe it'd surprise some our shareholders with stuff outside the pit, but largely the story is within the pit for the near term. But we got our hands full right now with 60,000 meters, keeping us busy, lots of news flow, and a very clear, focused objective.
All right, so there's no need for relocation of any adjoining towns or anything like that, certainly not at this point.
No, well, certainly not. We are a drill story at this point in time. We are proximate to the town of Chapay, which is a mining town, and the town of Chapay, was born for the Opimiska mine when it was operated by Falcon Ridge. Our clear objective is to not move any houses or anything of the sort. We see no reason at this point in time to do that. Now, make no mistake about it, we are proposing to put a major industrial complex proximate to this town. And that has impacts, and that's something we're taking very seriously. We've ever since we acquired the project back in 2019, we met with the town and we told them exactly what our objectives was. This can be an open pit. It's not an underground situation, so we communicate is key for all of not just the town of Chapay, but the town of Chibougamau, the local First Nations, the Ojibougamau. Everybody knows what we're doing, and we keep them updated. I think. Where I spend a lot of my time is thinking about building a company. Okay, so the last 3 years of QC Copper has been about developing the Opimiska to where it is and to where it's going to go. Now we believe we have a mine. It's very clear in my mind and in Charles's mind. Now there's no guarantees, but that's what we see, and we know what we're doing. So we see that opportunity, and we're thinking 2 and 3 years out. And how do we get out ahead of everything? How do we make the plans to be in a situation where we actually can make a construction decision? And community engagement, community involvement, and the community awareness and communication are something that our shareholders can expect to see as we roll out those initiatives and build out our team. We are my background is in finance and deal making. Charles, who is the key technical guy, is a brilliant geologist and deserves all the credit for the visionary work on that he saw on the Opimiska. But we need, as I said, we need to start thinking about building a mine. So we need some mining folk. So those are things that we're working on, and we'll have news flow on that in the not too distant future.
All right. And as far as financial situation, how much money's in the treasury? Any raises that you're going to be contemplating in the near future?
We have more cash than we can spend right now, which is a junior miner's dream. But we're also spending a lot of money, and so we have, as of January, we had $18 million in cash. We also have 10.7 million shares of Baseload Energy, which is an affiliate company of ours that we will sell when the time is right. That company's got $20 million and is drilling a 10,000 meter campaign on its program. If we get great results from that, maybe those 10 million shares are worth a substantial amount of money. They're worth a substantial amount of money today, but we think we're holders for the time being. But this project is going to require more than $18 million to develop it and to build it in the mine. There's no question about it. So there's investors can expect us to go back to the market. We will go back to the market when the cost of capital is acceptable, and we'll also raise money from a position of strength.
Well capitalized, well funded, and for the foreseeable future. What, if any, interest anybody potential acquirers showing here?
Oh, we've had lots of interest, but being acquired is of zero interest to us at this point in time. Look, I'll speak very frankly. The market does not yet realize what we have. If you look at our enterprise value, which means strip out our cash, strip out our position in baseload, and look at what the market is paying for our asset, I would be crazy to consider selling. And, I'm hesitant to raise money. And hence we won't be raising any money, at this cost of capital for now, because we've got more, we're cash heavy and we have a cheap stock. So, I think that's an opportunity for people to buy on the market, of course, but we don't need the money. I always keep my options open. I will be opportunistic. Of course, we are in the province of Quebec, which has the most advantageous capital raising structure in the world. We can raise not only flow through, but even better than flow through. We have available the charity flow through system to us, which provides a high quality investor at a substantial premium. Our last financing was done in the fourth quarter of last year. Our share price was trading around 35 cents, but we raised the money at 60 cents. That's almost unfair if you're not in Quebec. So we would be remiss not to continue not to take advantage of that situation. I'll also note we raised over $8 million by selling 7 million shares of base load at an excellent price. I think we sold it at about $1.15. So the timing was great on that. That's what gave us such a strong treasury. That puts us in the driver's seat to spend the money as intelligently as we can. And then when the time is right, and be opportunistic and use our ability to raise money. And our group has clearly shown that we have the ability to do so. So we'll see what happens. But for now, we're focused on operations and execution.
And not to mention share structure, really advantageous for a junior miner.
We've got 135 million common shares outstanding. We got about, I think, 40 some odd options and warrants. Most of those are coming off due this year, and so that's either cash in our treasury. I look forward to not having any warrants options outstanding. Those are sort of legacy issues from previous financings. And I think towards the end of this year, we'll have a very tight capital structure, no overhangs. And will be judged on the success and the size of the deposit.
All right. And hey, so news flow you alluded to before, it's really going to be picking up for this year.
Yeah, well, 60,000 meters provides for a lot of news flow. We're obviously not going to be releasing every single drill hole, but I suspect we'll have a lot of good results. Some hopefully that really can make an impact. If you look at historical drill results that have come out of this project, we've had 2.5% over 74 meters. We've had 1% over 160 meters. So those are the types of things that are possible. Any day any hole could deliver a result like that gets attention. But in the meantime, we're also really focused on the infill drilling as well. So who knows? But this project certainly has a history of delivering excellent results, and irrespective of that, we've got 60,000 meters. That's an awful lot of kicks at the can to deliver headline results. But really, I think the key is understanding that the real value driver is the resource and defining that. It's nice to have beautiful intersections, and I certainly hope we can deliver those, and I expect that we will. But where we're going to make our money is taking that 100 million tons, making it 150, making it 200. Who knows what it's going to be? Those are forward-looking statements. But this project has that sort of potential. There's no question about that.
Yeah, and it's impressive, the company's financial position, land package, the resource. All these factors together is what investors look for in a junior mining company. So I suggest you go over to qccopper.com, sign up for notifications so you'll be first in line to get obviously a rapid pace of news flow that's coming very shortly. Tickers in the US, QCCUF. And of course, in Canada, it's QCCU. Stephen, wish you the best. We'll talk to you again soon.
Look forward to it, Kerry. Thanks so much.
The Financial Survival Network.